On the editor's cut today, we've got two distinct topics. One is a sector and an index that has gained over 16% since the start of November, and in that time the Nifty 50 has gained about 14%. So it has outperformed the benchmark, and all through FY24 so far, you've had analysts, you've had investors write off the sector. This is of course the IT sector that we're talking about. In just about 10 days from now, it's going to be in focus on the back of earnings. So the question that we're asking is whether or not some of this is running ahead of the pack, and whether or not some of that pain in earnings that a lot of people have said will continue through FY24 will lead to a little bit of a drag for some of these stocks. We'll give you some of the insights that you need to bear in mind in the next 10 days. The other is a stock that is over 5 lakh crore in market capitalization, which a much smaller free float. And some of the uptick in the stock is because the government has come out and said that the timeline for this company to reduce it or to increase its public shareholding is going to be pushed quite significantly. This is a stock that is played catch up with the rest of the industry as well. Life Insurance Corporation of India, if you look at the 1 year gains, it is now ahead of SBI Life as well as HDFC Life, and that's saying something for a stock that is yet to hit its issue price. We're talking about whether or not that relief rally, if you can call it that, is a little overdone. But let's start with the IT space. Tushar is going to take us through some of the key aspects to focus on. Tushar?
Good morning, Alex. Good morning, gentlemen. So, as you pointed out, IT pack has been it's painful in the last 1 year. What I believe, it's not going to dissipate anytime soon in the next 1 year as well, given the fact that we're going into Q3 earnings right away in about the next 10 days. So, let's talk about first about Q3. So more of the pain is going to persist in for this particular quarter, because October to December is a seasonally weak quarter for the IT pack because of furloughs and fewer working days for our Indian IT companies. Secondly, Accenture has already guided for about 1% sequential growth for its quarter, that is December to February, which effectively means that we are looking at pain for the Indian IT companies as well. Accenture added 10,000 employees in its first quarter. That is the quarter ended 30th November. We will not be adding, Indian IT companies will not be adding more because they're already flush with staff that they acquired during the pandemic. So essentially, we are looking at more of the same pain that we have seen so far in 2023. 2024 will be an entirely, what I believe, or what I have understood from analysts, is that 2024, the whole calendar year itself will be weak for IT companies. Again, let's take pointers or cues from what Accenture said in its latest earnings. It said that for its fiscal, from ending August 31, it follows a September to August fiscal. They're looking at a growth of 2 to 5%.
And they've reduced it?
No, it's static, which is again a plus, sort of a plus. I'll just come to that a bit. It's about 2 to 5%, what they're saying, which essentially means that we are not going to look at the kind of numbers that we saw from IT companies in the last 2 or 3 years of the pandemic. So essentially a muted, a lackluster year, no fireworks as to what we maybe expect from a TCS, of which, for example, at this time last year, they had said they were looking at double-digit growth in FY24. That did not happen. That changed immediately after the first quarter results of FY24. What we are looking at is, again, mid-single-digit growth numbers for the Indian IT pack, going by Accenture's numbers. We see a margin expansion, what Citi said yesterday. We are looking at a margin expansion of about 50 basis points. Again, no margin levers left. We have exhausted delayed wage hikes. We are not hiring people. There is a reduction in headcount, so maybe there is some leeway there to maintain their profitability at those numbers. But beyond that, I don't think so they can do it.
So the question is, why are we seeing such a big run-up? And maybe Niraj can weigh in on that in some of the conversations that he's had as well, on the valuations front, right? Because we've seen sectors and stocks run ahead of time. And we said, I think, mid last year, 2023, that the pain on the fundamental side is not over for the IT companies, but maybe the bottom on prices has been hit. That kind of played out.
But the stocks have rallied a bit as well, right, in anticipation of that. So in some sense, Tushar is preaching to the choir, right? Because one would presume that fundamentally things are not definitely going to improve. The antidote, maybe just one more point, just to Tushar's point, is that the antidote might be global in nature as well. If rates come off, and in some fashion, that is a big plus for metals, for IT per se. And could that help the overall sentiment on the IT pack, which hasn't quite gone anywhere.
I think absolutely, you're absolutely right that that is a key trigger that can happen. So if there is, we don't see any more rate hikes by the Fed.
Which
if
is a given.
Pause, it's a given actually. And if there are 3 rate cuts as what the market is pricing at this point of time, we are looking at a lift off by these companies by say June or July by this year. Second, we have to also realize that we are talking about the fact that things are not going to deteriorate from here on. That's what investors are likely pricing in.
The worst is over,
So what they're saying is, what we'll see for the entire year, 2024, is more of the same, which is good news. It's not going to worsen. That's what is rallying the stocks right now.
Yeah, well, this could be interesting. The last point, just one quick point here.
Yeah.
Everybody's factoring in 3. We had Manish Dangi yesterday saying that what if there is more? What if we actually don't have, it's usually negative for equities, but what if it's not a soft landing, but a hard landing, and the US Fed does a lot more in terms of rate cuts? Could that actually spur it even more? Could we have an earlier rate cut than June? And could the markets with discounts events like 3-6 months before they actually happen bring about further triggers? But this is interesting data from Tushar.
No, certainly, absolutely. And in fact, the second topic is no less interesting, because if you pull up the chart, the price chart for LIC, and you see from the 23rd of November or thereabouts, the stock has gained about 36%. Now, some of that, of course, has to do with the government's announcement about the pushing forward of the public shareholding. What else is playing?
Well, yes, so a couple of things since have played out, Alex, and good morning, everyone. The first thing that's essentially played out is the fact that we've seen LIC consistently deliver on the VNB margin front. The guidance during listing in 2022, when VNB margins were 9-ish%, was that we'll take VNB margins to 15 to 16%. Now, at that point of time, when I was tracking it, it looked unrealistic. To take VNB margins of such a large enterprise from 9% to 16% would take a lot out of the company. Whereas they've managed to do that.
In the second quarter.
They're in that 15% bracket over the last 2-3 quarters consistently, which essentially says that whatever the guidance that LIC is really pushing for, they are able to meet some of those guidances, especially on the profitability front, because VNB margins indicate profitability. So that's point number 1. Point number 2 is that in any case, life insurers, since the month of March, since the budget, were quite beaten. So we saw LIC, if we can have the chart from March on, LIC has actually rallied 60% since March of 2023, since the budget announcement, since the bottom in March. So from 530, the stock has essentially gone to 860 odd and come off to 840 where it currently sits at, which is a very, very solid rally, especially coming from a PSU. And therefore, the question begs, were valuations really, really steeply cheap? And that's where, if we look at the price to embedded value, which is how you typically value life insurers, it was at 0.5 times. When I'm looking at other peers, you have the likes of an HDFC Life at almost 3.5 times. You have the likes of an ICICI Pru 2 times, and you have the likes of an SBI Life 2.7, 2.8 times. And therefore, this valuation catch up, it's still not even 1 time.
Yeah, it's still 0.8.
It's still 0.8 today as we stand. And therefore, it's a bit of a valuation catch-up as well. So it's a combination of factors, Alex, which is playing out.
So, but then the question is, with that kind of a run-up, a lot of people, that have held from the start will say, look, it's still an underperformer in my portfolio. But those people that manage to get at the bottom will say, look, is there a significant upside from this point on the business side? They've, like you've said, they've expanded their margins to this point, but there's a lot more that's playing, right? One of those is the move away from traditional business. How much of an impact could that have in the near term?
Yeah, absolutely, Alex. So you've hit the nail in the head. Despite all of this, LIC still continues to lose market share. Yeah. And consistently lose market share.
Exactly.
And that is set to continue. When I'm listening to commentary from other life insurers, largely the commentary seems to be coming that we're confident that we'll grow at a significant delta versus what the market is growing at, which means that they will outstrip growth of market, which means that they will acquire market share, which means that LIC will lose market share, right? It's a +1, -1. And therefore, that commentary seems to be intact. The other thing is LIC is a very, very large war machine. And therefore, growth will always be a challenge at double digit. But at the same time, they've guided for double digit new business premium growth for the current year. When the first half, they've grown just at 2.5% on new business premium. And therefore, they're expecting a very strong second half. So it's
Which
a
is
bit of
normally the
both.
case for the LIC, for
Yes.
life insurance.
Which is the other reason why the stock has rallied as
Yeah.
well. But it continues to lose market share. It's a typical PSU. It operates as one. And it's a lender of last resort. Whenever the government needs it, it does provide funds as and when required in whatever space that actually requires funding, Niraj. So,
Niraj, any last thoughts? The argument has been made for public sector banks for LIC.
Yeah,
Does
so
it still hold?
similar vein, right? PSU index has rallied so much, so no surprise that LIC, being a large PSU player out there, has rallied. PSU insurers, I mean, it's not just LIC, GIC, RE, or any of those others, right? They've not created wealth since the listing. So about time that they do. The only question that, and as Hersh pointed out, that while they are picking their act up, it's not that private insurers are sitting by the wayside, they are doing this. And as a retail investor, you don't need to have an insurance stock in your portfolio because you're not matching it to the index.
Yeah.
If you don't understand the business, leave it alone. Look at other sectors.
Absolutely. And on that note, that brings us to the... Oh, you want to make a point?
one last point, Alex, and one very critical point here, which I missed making. Typically, your public shareholding has to be 26% as per SEBI norms. LIC's public holding is just 3.5%.
But they've got the leeway now.
They've got leeway,
Yeah.
They're for 10 years.
but that 20% is huge. What the government essentially needs to divest is roughly 1 lakh crore, which is massive.
Yeah, fair point.
It took a lot for them to divest 21,000 crore, let alone a
So
lakh
the government
crore.
is invested in getting those. And very last point, only 5 of the 19 analysts that are tracking this company, that are tracked by Bloomberg, still have a target price that has not been hit. So bear that in mind on Life Insurance Corporation of India. Lots more lined up in just a bit. Do stay tuned. This is NDTV Profit.